Okay, there's some news coming in from PTI. The government is mulling more FDI in news channels. So that's the latest that we're picking up. And some of these news channels, TV Today, NDTV, are all spiking up over there. But we'll try and get to the bottom of this. For now, let's get you some market opinion. Latha Venkatesh caught up with Pankaj Vaish, the head markets of Citi South Asia, and began by asking him whether flows into emerging markets and India will continue going forward.
The global backdrop, you are correct, that the fact that the Federal Reserve in September could not hike, and if you want we can talk about that a little bit more, that has given a bit of a all clear. And then when you had the non-farm payroll report, I think it looked to a lot of market participants that the Fed may not be able to go for many months, and so people who, and actually we didn't notice it so much in India, but if you look at Brazil, where government bond yields were going in double digits and the currency had gone to 4.25, which used to be below 2 just a couple of years ago. So when you start getting those kind of values, I think people felt at least a bit brave that they could step in again. It's been quite a bloodbath in emerging markets this year. I think in India we've been fairly lucky that we haven't experienced a big chunk of it. But most EMs have had a very bad time, including some in Asia. So I think this gave a little bit of a comfort to market participants. But India will definitely be a beneficiary of it, and India is clearly among the best of all EMs. But I think these hedge funds are being quite careful in terms of picking apart which country they want to get into. So there's still serious issues with South Africa, with Russia, even China, of course. So they're being quite picky about which EM to get into, but India clearly is among the best, and so we will be beneficiaries of that.
We got Chinese GDP numbers, came in at 6.9 versus the polls of 6.8. Even the quarter-on-quarter numbers are better at 1.8 versus expectations of 1.7. So is it that China is not going to be the big negative force it has been year to date?
So I think our view at Citi for quite some time has been that China is quite weak. We think actually the real numbers may be far lower than this. We had our offsite in Shanghai at the end of July, and when I came back from that, I mentioned it in an interview also, that some of our friends over there are thinking that the real GDP growth may be in fact below 5%. Now the thing in China is you can pretty much get the number you want, so you have to be a bit careful with it. Given that the Federal Reserve in September kind of ended up mentioning China so many times in the press conference, I think more than they wanted to. But now that the market community believes that they've tied themselves to China, watching China has become very important. Even the import number that came last week was discussed to death in terms of is the INR component okay or not. So I think we are watching it maybe a bit too closely. The reality is there is a clear deceleration in China. Whether it comes a tenth better or 2/10 better than people's expectation is not important. They've done something quite messy on the currency front, which net people have not been able to figure out what it achieves. They say they're trying to become a lot more open market oriented. If you believe that, that's fine. I think that's okay. We can give them that benefit of the doubt. But then what they did on the CNH and bringing it below CNY, it's led to a lot of confusion, not the confusion that a major superpower, economic superpower, should be propagating in the marketplace. So our own view is that the domestic economy actually is fairly weak. They are trying to orient more towards the services sector, away from manufacturing. That transformation is not easy. In a command economy, still it can be a bit easier, but still is never easy. And the asset situation, the debt situation is actually still extremely problematic. So we're still very concerned about Chinese growth. You can still always have 1 or 2 quarters of better than expected because people have ratcheted down their expectations. But we are concerned about the Chinese market.
Speaking about Indian markets itself, it's not just FII fund flows have turned positive. DIIs have been, domestic institutions have been the big supporter of this market. Do you see that continuing?
We think professional assets under management in India are just way too small as a ratio of GDP versus the developed markets. So we think there are a couple of catalysts that are going to push people into moving away from the traditional competition in real estate and gold into financial assets. with this anti-black money legislation, I think, and with the tough punishment that it comes, so hopefully people will that support will be gone from those markets. And secondly, the next generation is financially more savvy, is more educated, and is willing to hopefully pay for professional advice, which is what my friends in the asset management industry keep lamenting, that people just in India don't want to pay. But now you're seeing these flows finally after so many years coming back in. Obviously, the government's election last year was an important turning point. But there is no reason, if when you have 30% savings to GDP, and even if 5 percentage points of those 30 go into the equity market, why you can't have tens of billions of dollars a year? I mean, they definitely should dwarf FII flows. We are not a small country, we're a very big country. So I'm happy for my friends in the asset management industry. I think this trend should continue. There will be months, even quarters, where you'll have outflows because people are unhappy, they want a little more clarity on the legislation side. But as a secular trend, I think the catalyst of anti-black money, of real estate prices getting some sense knocked into them, gold prices globally remaining calm, I think all of that, and then the rupee remaining stable, all of that means people will look at other asset classes, and I think these DII flows should definitely continue. That after a while we'll even stop worrying about what FIIs are doing. That will be the day I look forward to.
Okay. Well, does that put a bottom to this market for the moment? And what is the top for this market 12 months down the line?
Yeah, I think, the big technical support was around 7,000, and so we bounced ahead of that, which is the mark of a market that's resilient. And frankly, for us to sell off, it was a little bit more in sympathy with what was happening in the global markets. There is some legislative disappointment, that's fine. Earnings are a bit tepid, but again, my strategists keep telling me that this is the bottom and it's going to be improving from here. I was relieved to see the RBI finally do a 50 basis point. I had said in an interview, we are taking the scenic route, but we'll get to the right place. So I think all those delays on rate cuts were the scenic route, and finally we are coming to the right place. We think there should be another 50 basis points over the next 6 months, 9 months. The room is there. And so the supporting things are coming together. I just wish the legislative agenda would move a little bit faster.
No, and therefore what? Is it 9,000, 10,000? What can we hope for in 12 months?
So you need to get to 9,000 first before going to 10,000. I think, yeah, in the next 12 months, we should go back. In fact, in the next 3 or 4 months, I hope we'll go back to the old high of 9,000. And then depending on what happens in the Rajya Sabha makeup, I think then we should be on our way higher. But let's just first see us regain the old high, which we should. And then these elections, I think, are important, some of the state
Actually,
elections.
I was so glad that you said 9,000 in 3 or 4 months. That's extremely optimistic. What happens if Bihar turns negative? Will that stymie all efforts to reach 9,000?
It'll be a disappointment, mainly because Bihar is a big state. Actually, my economists tell me it doesn't change that many seats in Rajya Sabha for next year. But I think it will be a disappointment that the whole excitement, obviously, with the BJP, that Delhi obviously was a very massive outlier. But if a big state like Bihar, where obviously campaigning has been quite intense, if that doesn't go the BJP way, I think there will be some disappointment that what does it mean for the wider country. But so that just means it will take longer, I think, than to get to the 9,000.
Okay, you can catch that entire conversation at 6:30 p.m. only on CNBC TV 18 today.